Well, hello everybody, welcome. Um, my name is Martin. I'm a product manager at TradeLogic. As some of you know, TradeLogic is a software company which provides solutions for binary option brokers. And I'm here today to present our new product for exchange-traded binary options, which for short we call Binarex. Before I get into the product, I will make very short recap of the business and how get to the level where it is now, and how Binarex will help in the present and in the future development of the business. So I'll start with some overview. As you know, the binary options are fairly young business. It became available for retail brokers and investors at 2008, and the first trading platforms and brokers started to appear at 2010, 2011. And since then we see that the trend of the growth is pretty steep. That's because it's very easy to understand from the perspective of the traders. It gives them very easy access to trade on the financial markets, and it's also very easy for the brokers to onboard traders because it's very easy to explain them how exactly to trade, how to operate. And it requires much less cost compared to the Forex business, for example, because it doesn't require any straight-through processing mechanisms or big servers. So it's developing really well in the last few years. So what are the challenges which we are facing in the last even weeks, because they're appearing very recently? One of the challenges, which I'll start with, is the trading with the market makers, which is the fundamental challenge of the binary option business. The lack of the straight-through processing of the trades means that all traders currently are trading with their brokers. So when you register in a binary option broker, you're trading with your broker. So this is, from the perspective of the traders, leads to some complaints that they're not sure that their brokers are treating them fairly. And from the broker's perspective, it's kind of risky because they don't want to take huge risks with bigger clients. So they try to keep the things in the balance. So the second thing which we see as a challenge in the current business is the tightening regulation. As I said, it's a fairly young business. It's still developing. And the regulations are becoming more and more tightening. Back in 2012, Japan actually started regulating the binary options as under their financial authority. Before that, they were not sure how exactly to regulate it. On the other hand, in the United States, it's under the CFTC from day one. In the UK, binary options are still under the gambling regulation, and we see that in Europe it becomes more and more regulated as the Cyprus Financial Commission is releasing new requirements and new rules every 6 months for the last 1-2 years. April this year was the last one, which was related to exactly to binary option trading and the information which needs to be disclosed with the end users. But the regulation as a whole is a very good thing for the business. It's good for the brokers because it builds trust in their business. It makes the product more transparent to the end users. Of course, it requires some additional costs, but in the end of the day, it gives them access to to wider market. It gives them opportunity to advertise and to tell to their clients, look, we're a trustworthy company. You can come and become our clients. So we as a technology provider embrace this regulation tightening, and we think it's good for everybody. What is not so good for the business, it's very challenging, is the government's bans, which we saw actually very recently. This August, Belgium bans all derivative trading markets services. So this includes CFDs, Forex, leverage trading, and binary options. Last month we saw Israel also banning the binary options. And actually last week, France banned the advertising of binary options. So this big challenge which we're all involved in and we need to address. So what we can do to address all these challenges, how do we handle them? So one thing what we are doing now and we will continue to do is follow all the changes and comply. So whenever a new regulation requirement comes out, we as a technology provider do all the changes in our software immediately so our brokers can still keep their business going. Whenever a country bans the whole operation, the brokers shift away and move their business to another market. So this is something that it's not new to anyone, and it's something that is going and we are doing. But the other thing which we can do is to offer another solution, a different solution, and try to change the retail binary options from its heart as a concept. So that's where our product Binarex comes in place. So what we actually offer is to create a binary option exchange, what fundamentally means that the traders will no longer trade with market makers and with their brokers, but the brokers will come between them and the traders will trade against each other. So it's straight fairly as on any regulated exchange, any stock exchange, future exchange, whatever, just name it. The traders trade between each other, the broker is just there to onboard them and to give them access. So just few graphical examples. If you imagine that this is how the business looks today, it's like you have up here the brokers and they're just on board investors and they're trading with their brokers. We want to change this by Binarex by creating access to the end users, to the investors, to an exchange, and actually the investors are trading between each other. And one more fundamental change which this will bring to the market is that actually investors from different brokers will be also able to trade with each other. So you're not now locked only with your broker, you can trade with users from different brokers. And the brokers are there to support actually their users and to give them access to this exchange. So what is different here is that the binary options, where they're traded on the exchange, they need to be standardized. They need to be made in contracts. So the binary options on exchange are traded in contracts. They're standardized. They all have assets, expiry time, and strike level. But the trading is kept very simple as it is now. The traders need to predict if the price of the asset will be higher or lower at the expiry time. And if you expect that it's going to be higher, you buy the option, you buy the contract. And if you expect it's going to be lower, you sell the option. And because they're standardized, you just trade these contracts. So I'll continue with this example. Here we have a buyer and a seller. Then they make a trade for a binary option contract, which is priced at $40. So the buyer is investing $40 and saying, okay, I expect that the price expiry will be higher. And the seller is selling this binary option for $40. So he's actually putting 60 as initial margin or as invest amount. At the expiry, whoever of them is right will take $100 as a win in his account, as a return. Actually, before this became a trade, these are standard orders on the exchange. And when they're matched, both investors pay fee to their broker. So the only incentive of the broker is actually for its users to make more trades, to generate more volume. The broker does not take any side of the trade. They're just here to support and give access of their users to the exchange. And when the trade expires, the winner, because it's closing the trade, pays another fee to the broker. So it's entry and exit fee. And exactly this exit fee, because the broker has more incentive, receives more profit when his users are profit. Actually, this creates incentive for the broker to have profitable users. And if you get back to the picture where traders from different brokers can trade between each other, actually, if you're a broker with successful traders, they'll generate more profit for you than traders from another brokers which are not so experienced and not so profitable. So in this model, instead of trading with your users and to be against them, you're just supporting them, and you have the interest to support your users and make them more and more profitable. And this model, which we have created, it already exists. It's not something that it's new. This is actually how the business operates in the United States. It's regulated from the CFTC from day one, and it's only involved with harder and harder regulations. But it's doing pretty well. So these are the numbers from Magnates and Counter Exchange, which are the two exchanges officially operating in the United States. And the only thing through these years which have actually changed are the regulations. They become more strict, but the profits of the exchanges and the volume which was trading there, it's actually increasing. So what we think is that this model can be translated in Europe or in Japan, and what we've built is actually the software and the whole engine which take care of the trades, of the matching mechanisms, of the clearing house, which will be responsible to clear the trades for each site and each broker. And now I'm going to show you how exactly it works, and you can make a trade on the platform. So it's this is a snapshot of our demo. As you see, it's a standard trade room. We have the asset list on the left side, the charts in the center, and orders and trades table down below. So the first thing that we do as a trader, we choose the asset that we want, and then we choose our option. We choose our option by selecting expiry time, and after that strike level. So we see that for each strike level, we have quantities, and we have price for sell and buy. And all of these are actually available orders on the exchange, which creates the market. So after selecting our option, we choose to buy or sell it. It depends if we're expecting the price to go up or down. In this case, we have selected to buy the option. And now we can, in the order ticket, to put a market order, which will be executed immediately on the best available market price, or create a limit order, which will be put it in the order book and wait to be executed. So in this example, we make a buy order, which is visible in the order tables, for 10 option contracts. And when these contracts are matched, they can be matched partially or they can match fully. We have a trade. At the expiry time, if the price of the asset, in this case the euro pound, if it's higher than the strike, this trader, this investor, will receive $100, and his profit will be paid by the seller. Before the expiry, of course, he can exit from the market by just making the opposite trade. So basically, this is the platform which we have created. The main things which we think that this model is good for the business. It is changing the relationship between the brokers and its investors. And as we all know, the exchanges are something that is actually regulated from a long time. It's something that we all know how it operates, and we will not have the same problems with the regulations that the current retail binary has. So that's it. I'm open for any questions if you have. Anyone? Yeah. If you're a broker, come again because I can hear. What volume threshold do I need to reach as a broker to make this model sustainable and profitable? Sustainable and profitable for volume? Well, as we make some estimations with our current clients which are interested in this model, we saw that if you're currently a binary option broker which operates in the current model, you need only to double your volume in this model in order to reach the same profitability with the same amount of users. Which doubling the volume, it shouldn't be that hard for the broker, because actually the money stays on the market, because in the current model, on every trade which your user is losing, you are getting into your pocket, and you cannot keep this volume going on. And now this money are just transferred from one user to another. And this way the volume generation should be that hard. In the end, it depends how many clients you have, but the models which we run, it's 2 times higher volume. And of course, it depends on how big commissions and fees you're going to charge. Yeah. So this is configurable, like this main competition between the brokers. You can have one broker which charge small commissions and it's chasing, you know. You say that it's interlinking with other brokers as well. So one person on one side of the trade is on another brokerage with another side of the trade. Is that what you're suggesting? Exactly. How many would you expect to be part of this network? And how many now, and how many do you expect in the future? Well, currently we're just launching it, yeah. But we receive interest from few of our big clients, so we expect at least 3-4 brokers to step in. And in future, we actually think that this is the future of the retail binary options business, because we saw that some countries don't like at all the derivative market as it is now. But if it's exchange traded, there is no problem.
What's the fees that you're seeing the brokers will charge for?
What's the fees?
Approximately.
Approximately. Well, in this model that we run, if the options are priced between $1 and $100, this revenue is reached with a fee of $2 per trade. Per trade, yeah. $2 per trade.
And I presume there'll be exchange fees as well, then. So you've got broker fee and exchange.
Yeah, this is like negotiable between the exchange and the broker. Usually the exchange needs to have a fixed fee, and all brokers must have their own markup. So, and it also depends on the regulation, I think. Like, we cannot go with huge fees because it will make it not attractive.
Are there any restrictions in your perspective on given you accept? Which binary merchant are you accepting? Is it everyone that will apply and given them commissions? Or is it a matter of regulation, volume, volatility? Is there anything that you are going to distinguish or makes it possible to some merchant to others not?
By merchant, you mean the brokers which want to operate? Yeah. So regulation is one thing. So if you're a broker which goes through the regulated market and wants to operate on the regulated market, we think like there shouldn't be any big obstacles for you. Like as long as you have the license to operate on the particular market. Come again? Yes, yes, sure.
You answered one of my questions, which is I was going to ask you if this was just for regulated brokers, which you just
Yeah,
answered.
in theory, just say in theory this could work like for unregulated brokers as well, but
Okay, well, I was also going to ask you, are there regulation requirements on the exchange itself, and if so, what regulation?
yeah, currently because we are the technology provider of these, and we have a partner which are Novox Capital, which are currently working on the licensing to get the license of such a trading venue or exchange. So they're dealing with this part to operate as an exchange. We are as a trade logic. We are not the exchange itself. We just make the engine and cover all requirements to clearing and all the trades, how they're matched. So of course there are regulation on this one, how the trades are processed, which trade comes first, like must to go first out, like how to process order books and all of this. So we just have created the software following all these requirements, but the license needs to be get from exchange itself.
You just touched on a point about client's money. Is the client's money at the exchange or at your own brokerage, and how does it get transferred from one brokerage to another?
Yeah,
If you're trading between two brokers.
Yeah, this is what the clearing needs to take care about. Like that's why you have the regulated brokers, which have the license from the clearing and the exchange. So when one user makes deposit in one broker, another user creates a trade in another broker, the clearing takes part of for each one of them and makes sure that the funds will be available in the end of the day. Yeah.
But if you don't have a lot of, say, clients in the beginning, are you going to have a two-way market?
Yeah, Yeah, that's a great question. As an exchange, it's also open for market makers. But the market maker here is operating as a separate trader. So we also have a partner which is ready to operate as a market maker on the exchange, and these numbers which actually saw is the market maker was running the tests on our own platform. So if you start from day one as a totally new broker and you don't have any clients, you will not see zeros, you know. And if you want to operate as a market maker, you're not interested like in brokerage, you can also, through very simple API, join into the exchange and start offering prices if you're good at this business. Any questions? So thank you. If you have more questions, you can join us on the booth. We're just outside of this hall. Thank you.
Thank you very much, Martin. Good luck with that.